Hi, I'm Charles Payne, and thanks for joining us before you begin your three-day weekend because, hey, you got to pay for it. We're here to make you money. And that's how we do it. Listen, we do it by investing in the market, but also helping you manage the thing. We call this thing the real deal. Now, I want to tell you, this concerns two things. You already get news all day long on your smartphones, and you see the headlines, but they tell you nothing. The same thing with corporate earnings and the knee-jerk reactions. There's only one way that you can truly understand what's going on. You've got to peel away the layers. You've got to crunch the numbers. That's my job. Here to help the investment pros, we got Heather Prabhakar. You know, black yesterday, dark gray today. I'm a little worried about you.
I'm upset summer's over. It's the last weekend of the summer.
I don't know, but you're going to morning too soon.
All right.
Matt McCall thought about me all day long every time Splunk went up another $1.
I did. I'm like turning the screen around.
Tracy, you looking fantastic. You're going to bring summer out the right way.
I'm wearing summer till December.
Yeah. Did you see Obama's suit yesterday? I didn't think it was that bad.
I thought it was bad.
Did you? All right. It wasn't Charlie Chan, though. And we got Jim Frischling with us, president of New World Capital. Glad to have you back.
Nice to be back.
We got a lot of stuff to cover today, so let's do it. Hey, we're going to dig into our first real deal here. There are magnificent eruptions. Have you guys seen them in Iceland and Papua New Guinea? And there's smoldering tensions in key hotspots around the world. I think they make for perfect metaphors for our stock market and our economy. Now, I know the goal of the show is to answer your questions and to dig deep into find the answers, but I got to tell you, there are a couple of major trends right now that are sending unclear messages, and they will have major ramifications for the economy and for your retirement. Data is moving in decidedly two different directions. Now, consumers, they are undoubtedly spooked. But industry, the broader economic trends, they're moving much higher. All these numbers are amazing. And then, of course, the stock market, that continues to move higher, too. But even stocks have hit something of a lull. And, well, it could be seen as a positive or a negative. Right now, I want to blow the whistle. I'm going to give you the backdrop here. Open up the page to Payne's Investment Playbook. Some are saying, of course, that the market's come too far too fast and that we are so complacent. Now, there's a couple ways to measure this. One is the so-called fear index, or the VIX. Well, it's rarely been at this level before. I mean, if you want to talk about not being afraid, that's a picture of not being afraid. Then there's this week's action, or should I say lack thereof. Do you know that this week saw the tightest three-day trading range in the history of the NASDAQ? In the history of the NASDAQ, this is absolutely remarkable. We're talking about the NASDAQ, which is known for its wild swings. In a three-day stretch, it went 0.51, less than a historic average. It just didn't budge. Okay, so let's discuss this, guys, because for me, the real deal is that this is the calm before something big. But I think that the market is going to blow up like one of those volcanoes and go straight into the stratosphere from here. I don't think it's going to crumble. And there are a lot of reasons, by the way, I think it's poised to take the next big leg up. And I do think there's going to be big money made. So, Jim, the market a coiled spring ready to surge or a ticking time bomb ready to explode?
I'm playing this one a little bit more down the middle of that one. I think
it can't be down the middle between a coiled spring and.
Well, I'll tell you this. I think the market has another leg up to come. I think the economic data has been better, and I think a lot of folks are seeing that business activity is up. And while the consumer and we're going to talk about it later in the show, is saving a lot of money, the fact is sentiment overall is up. So I do think that there are some very good things to be doing. There's also so much money that needs to be deployed. Now, my concern, however, is that people are searching for yield, and we're talking to more investors looking for alternatives, looking at non-bank lending opportunities. So without the retail investors, and if some institution is going to rotate out, I think
what
the market
would you rotate out into?
Well, again, I think we're looking a lot at non-bank lending activities such as the housing market still, and how to basically deploy capital in the non-qualified mortgage space.
The Chinese beat you guys to the punch, man. All right, Matt, tell me, what do you think?
Well, when a coil's like that, what happens? It pops, right?
Right.
So we'll be popping champagne because the market's going to be up 20% higher in about a year from now as the market pops at the same time. And we see it all the time, and I always give you reasons why the market's going to go up. So I did a lot of research today of the bears, what their argument is. One is history. We haven't had a correction in 3 years. Typically, we have one every year. That's a terrible excuse, because when you're in a bull market like this, it can continue to keep going. Geopolitical concerns. We've had a lot of geopolitical concerns. We brushed them off. We keep going higher. And valuations. Forward PE of just below 16. That's historically average. When you hit a bubble and you break, it's above 20. So we have much more upside.
Yeah, I think they call that the gambler's fallacy, the notion that, hey, it's due. You know, you ever go to Vegas and you keep throwing the dice and say, sooner or later, I'm going to win this bad boy, and you scrape just enough money to get a bus ride home?
You know, I went to Vegas for the first time in my life last year, but I do know what you're talking about. And when
You lost all your summer clothes.
you know what? No, I actually won beginner's luck. I think what you're talking about here. I guess are you thinking that the black swan is coming? Because I feel like when we talk about the correction a lot, we had a little bit of pullback at the beginning of this month. I guess 300 points back. That we came back. Now we're at the levels that we were before. What constitutes as this pullback, and is it the black swan that we're waiting for?
Well, I think the black swan is you're not supposed to be able to predict the black swan, but every day someone's predicting the black swan.
I don't think there's going to be a black swan, and I think you're all overanalyzing it. The market's going up. It's going to jigger along the way. The volume's not going to be so great till everybody's back from the Hamptons. Contrary to what you believe, they do not trade in the Hamptons, Charles. There are no trading desks in the Hamptons. And that's it. And that's really that simple. I mean, guidance is okay, not great, but earnings have been better. We've seen top line growth. It's just slow and
coming
steady.
back, Charles, why can't we come back and buy? A lot of these mutual funds are struggling to keep up with the indices. When these hedge funds, these guys get back, I think they're buying into the end of the year.
If the market starts off strong Tuesday, I think everyone's going to chase. All right, here, Tracy, I want to talk to you. Well, let's revisit, guys, because yesterday we talked about targets. Companies that might be takeover targets for the remainder of the year. We didn't get a chance to talk about a lot of them, but this is a big topic. Everyone, to Jim's point, there's a lot of money out there, particularly with these big boys. I think they want to go out with a bang. So I want to get your guys' opinion on 3 names I keep hearing a lot. Whole Foods, probably it could be Icon, it could be Ackman, but it's one of those big names, public names that everybody knows. What's the likelihood of someone making a run for them, Jim?
I think people want to make a run for them, but I think they're going to stay the course. I believe they are on a great run. They are barely a third of the way into their own organic growth strategy. I think
they look like they're in trouble to me, man.
I think the organic and natural space is only getting more.
I know the space
popular.
is getting phenomenal, but they've got company now.
They got. Look, I do believe people are going to make an offer, and if I were them, I would stay on their own. I think they've got better days ahead.
I think it's a very high chance because they were run so well by management from the beginning. They've grown so big now. I think somebody else has to come in and take that over and manage the growth.
What do you think?
I had a pick yesterday, and it was Pandora. And
To be taken
watch,
over.
Pandora will be taken over.
Wow, that's going to be a huge premium, a huge valuation.
I mean, it could be anybody. Amazon, Google, Yahoo, you name it, Sirius.
Hey, listen, my subscribers are long the stock. I hope you're right.
I think Lulu is going to be taken over. I think they have some supply chain issues. They need online growth, and they also need distribution. I think VF Corp is one of the takeover
And also,
targets.
let's mention that Lulu is a Canadian company. Can anyone say tax inversion? All right, guys, hey, feeling poor is a lot different than actually being poor, okay? Americans are pessimistic, but that doesn't mean that there isn't a whole lot of money out there to be made. We will tackle that, and we're gonna come in with my investment idea later on in the show, because the fact of the matter is that you should be making a lot of money. When I saw this number, I've seen this trend now, I've been talking about it for a while. Greater savings, lower spending. So I want to get to the real deal. What we are seeing isn't really about the past. Maybe it is lingering. It's not about now, but these numbers for me are about the future. Tracy, we talk all the time about the issues that we know what they are. Government debt, poor leadership, the Fed printing money. But what's the disaster that everyone thinks, or that chart suggests, is right around the corner?
No pension at the end of the rainbow, no Social Security at the end of the rainbow, and really, really crappy leadership in the White House. And couple that together, and you feel like if you don't rely on yourself, you got no one.
But what happened? Like, all of a sudden in March, it felt like...
I feel like the March thing is a post-Christmas thing. We went out, we spent all this money, we got our credit card bills, and we were like, damn, we got to buckle down.
And
that
to,
was
I didn't even think of that.
And to add to that, I mean, credit markets are still pretty tight. They're not, we don't have access to credit as easily as we did. And let's think about it. We lost 28% of our wealth since the recession. I mean, that combined with the lack of access to credit is really having an impact on consumer spending.
But that doesn't make sense. If we can't get credit, we'd be spending money we had. So it's kind of counterintuitive. We're saving money. And I think we're saving money because in the last 15 years, we saw 2 major corrections in the stock market. People believe we're at that bubble level again. They don't want to deal with it. They don't want to lose money. They'd rather make 0.1% on their bank account and have that 5 years from now than lose any more money.
I get that, Jim, but I'm looking at the chart, and I saw where we went down to 4%. I mean, we were starting to spend money last year. People were dipping into the savings last year. People were starting to dip into credit cards, and then all of a sudden, maybe Tracy's right. I don't know. Maybe we start looking at our bills, but something spooked this country.
I mean, you mentioned the media. This show very much excluded and how negative it can be about markets. You mentioned the ineptitude of the government and the fact that the two sides can't get along. I also think that maybe the hangover from the crisis maybe is lingering a little bit longer than I would have thought. But to your point, I'm far more upbeat about the consumer, but I do feel right now there's not enough of that.
All right. Right after the Great Recession was over, 49% of the people said we're irrevocably broken. Now it's over 70%. How do you explain that, Jim? How did that change after? I mean, you could still smell the sulfur, the smoldering, the lava. We could still feel it. It was that's 4 years ago.
Much of this, I think, to quote Yogi Berra, if I'm not mistaken, is deja vu all over again. You have right now, we pulled out of some wars, and now we find ourselves going back into wars. The headlines are not helping, but I will tell you that there is a lot of great stuff going on, but people have to kind of shake it off, get up every morning with a little bit more energy. And I'm not trying to be a cheerleader, but I'm telling you, there is a fighting spirit.
There's nothing wrong with being a cheerleader, just because you're rich. All right, guys, listen. I was discussing just yesterday, in fact, the Farmer's Almanac with a friend of mine, and saying how much I really, really like it. It's that down-home wisdom. And I often feel like that with Main Street, and regular folks. So, give you an example. My mom, I remember years ago, she's like, Marshalls, it's great. I should have bought that TJ Maxx stock, right? The bottom line is that regular people, they're not only very smart, but they also often get this way before Wall Street, these experts in these ivory towers, but there's only one area, and this is the real deal. To Jim's point, I think there is too much pessimism on Main Street right now. And the media plays a big role in it, political ineptitude, to Tracy's point, plays a big role in it. But still, Heatha, what happened to this, can-do spirit that used to sort of get us over all of those kind of humps in the past?
I think it's still there. I just think that people are scared. I mean, we're seeing these GDP growth statistics. We were expecting GDP to grow.
The GDP number was great yesterday.
Not that great, though. I mean, think about it. We used to have GDP growing at a much higher rate, and the Bureau of Labor Statistics is now predicting it's going to grow at a much slower rate. This is the new normal, and I think people are realizing that. Maybe it's a little bit of the hangover from the frugal fatigue. People spent a lot, and now they're like, whoa, wait, we can't spend anymore. But I really think that's it. I think people are getting used to this new normal.
I think it's government involved, too, because in the past, that fighting spirit, the government kind of stood back and let us do our thing. Less regulations, taxes were still a little messed up. But now we're seeing the government do the exact opposite. The government's spending a lot of money while we're stuck at home at a job saving money. So that really puts you down. It's tough to get out of that.
I mean, you could argue that we have seen this before. We could look at Europe, right, Tracy?
Absolutely.
I mean, everything that's happening in Europe seems to be about 5 years ahead of where we are right now. We need to get off this path.
And anyone that's been to Greece recently will tell you they're still feeling the malaise really, really bad over there. So that's the last thing we want here. Charles, we talk about welfare, too, all the time here, too. That does not help your fighting spirit.
100 million people on welfare.
There's no fighting spirit there when you're standing at the mailbox waiting for a check.
I am seeing people try to reinvent themselves. I'm seeing people taking a step backwards. An equity trader who lost their job some time ago, whether the crisis or through technology, and now coming back to pick up new skills. There's just not enough of it. And I think if people read the headlines and think student loan crisis, credit default, issues, banks under, massive litigations, the fact is it can be depressing. But the glass is always full. It's not half full. It's not half empty. It's always full. But not enough people are thinking that way.
Well, I guess the moral of the story then is if you hang out in the Hamptons and you have no communication, you reinvent yourself and you don't panic when the market's shaking.
There you go. And if you're taking a lot of government kickbacks and a lot of benefits, you are also not really wanting to reinvent yourself.
Sounds like she's dissing your people. I don't know. That's all I can tell you. All right, guys, thanks a lot. Hey, you know what I always say, right? No pain, no gain. Well, last night, I told you there was a real volatile stock called Splunk with a great name. Now, if you listened to me and you bought it at the open this morning, you are already beating most money managers for the year. Wait until I tell you the rest of the story with the progress report. I've got some stocks, 6 of them. Some of them are losers. Be right back in 3 minutes. I'm going to make you some money. Splunk. Okay, listen, I will tell you right now, they just reported after the bell, and the stock is up big time. I want you to chase it. I know it's unbecoming to brag, but that was me last night because I love it. I mean, people, if you did buy that at the open, you made 11% of your money in one day. The stock was up almost 20%, 19% for the session alone. And there's a lesson because so often people will tell me, I don't want to buy that stock, it's already up. So they want to buy a stock that's already down. Usually stocks that are down have inherent problems. You're guessing that those problems have gone away. 9 times out of 10, I'd rather chase than try to pick the bottom on something. But I have to admit, though, chasing Splunk, I feel really good. I also feel good about 98% of the stocks I've mentioned on this show in the last 3 months. They're not all winners, but I've had a whole bunch of them. I wanted to address some of them, though, right now because, you know, I get the little tweets, I get the little emails, and you guys have a real odd way of picking out the ones that aren't doing so good. So let's go over them. Well, we just talked about Splunk. We're still in it. We raised our targets today. Workday, let's talk about Workday. They reported this week an amazing earnings report. The stock was up $2 in the aftermarket, got hammered yesterday, up big today. I think we're slightly ahead. Hold Workday. Avago, AVGO, same thing. I still like the stock a whole lot. It was up big. Remember, they reported also. What were the last 2 on the list?
Movado.
Chihu.
Chihu is the one that people are really upset about. Now, Chihu's been all over the place. I mean, this bad boy went to 100, then it went to 80. Now it's around, I don't know. Hold it. It's amazing. Ride it. Buckle up. Don't buy these stocks in the future if you can't handle it. And finally, this one is funny. The Sanderson Farm. Okay, here's the thing.
Here's the thing.
Yeah, here's the thing. The next day they reported and the stock opened lower. It opened lower, so you couldn't have been hurt.
A lot lower. A lot lower.
A lot lower. Yeah. And it was up big the day after that, up nicely yesterday. I forgot where it closed today. I love them all. I'm still in all of them. What do you think?
Workday, I love. Definitely hold on to that. A close above 92, major breakout for that stock. Love the sector that it's in. Chihu, again, down a little bit, but the Chinese internet stocks, such amazing growth there. Valuations fantastic.
You worried about the Alibaba IPO sucking all the air out of that?
No, I'm not. I think if anything, that brings more attention to his competitors and actually do well.
Jim?
I don't know. Movado, unfortunately, doesn't mean a whole lot to me. I'm a guy that wears a kind of one of those plastic watches, but I will say the Sanderson Farms, I'm joining Jimmy Rogers' band camp here because I do like the farmers. I do think they're going to have a lot more pricing power going forward. So while they had a little hiccup, I'm telling you, go buy.
It's all about the globe and protein and people having more money
They need
to buy
Viagra
protein.
for chickens, though, because they're having fertility issues these days.
Well, you know what? That happens every now and then. Okay?
That's the best of us.
But
I
it's
suppose.
cyclical. It's cyclical. Every now and then you get it back, you know? I know the Roosters are having a little troubles, but they'll get it back. All right, guys, thanks a lot. Hey, by the way, I've got a great stock idea for you later on in the show. I really do like this one a lot. But first, to Russia with love. Well, maybe not love, but certainly a whole lot of money. Traders on vacation, not paying attention to world events? Yeah, right, because they don't have smartphones in the Hamptons. Let me tell you something. Lots of companies making a lot of money, and you can too, so don't touch the remote. We're going to be right back. I'm going to help you make money. All right, guys, I got to blow the whistle one last time for the week. Let's open up yet another page from my investment playbook. Now, I continue to hear that when all of these big-time traders come back from vacation and they see all the news, they're going to dump all their stocks. You know, several thoughts run through my head. We kind of talked about this, right? They don't have access to news in the Hamptons. They can't put through trades unless they're in the office and at a trading desk. Or this is probably the real deal. They're having modern-day Roman feasts, and they're having so much fun, they could care less about Vladimir Putin. Listen, the markets, businesses, big and small, they are giving us a message, though, about Russia. And what it is that they simply don't see Russia-Ukraine escalating. Consider this. As of today, the count of McDonald's in Russia that have been closed, get this, 12. They've closed 12 of them. You know what that means? 128 of them are still open. Oh, how about this? The bakery, Magnolia, have you had them? Fantastic. They opened a store in Moscow today. I bet it was those rich Russians that have homes in Manhattan. They said, guys, you're not going to stop this event from happening. And remember earlier in the month, ExxonMobil, they were applauded by the man himself, Vladimir Putin, when they began drilling on a $700 million oil well. So I got to tell you something, guys. We talk about it every day, but business seems to be going on, big and small. You know, Matt, I got to say, I've heard all kinds of excuses from the bears on why this market's going to go down. The titans of Wall Street don't have access to the market because they're away geopolitics. Listen, we know there are risks to all of this stuff. There's absolutely no doubt about it. But for me, it's always sounding like sour grapes more than anything else. And I'm tired of it.
And the Bears are running out of excuses. They keep recycling them over and over, the same excuse. My
favorite one, though, by the way, is the Fed. When the Fed was pumping in $85 billion, that's like, as soon as they announced the end of QE, we're crashing. Well, they announced it, we went up. Well, as soon as they start moving down QE, well, they start moving it down. They're still doing 25 billion. I can't wait till they're not doing any.
Yeah. Like, we don't know that's going to end. It's not like we don't know it's going to happen. You know, the whole Russia situation, how many times have we talked about in the show where, you know, the market was down for 4 hours or for 24 hours on Russia? What happens? Ends up being great buying opportunity every time. So let the bears come out there, push the market down for a day or two. We can sit back and buy stocks on the cheap, in my opinion. And when they come back from the Hamptons, I don't care what anybody says, they're going to be chasing their tails, getting back in the market. I think that explodes the market.
Have you been buying dips?
I mean, one of the reasons I think this market has another leg up is how many times people step in to buy the dips. And the dips are getting smaller and smaller. I think the Russia-Ukraine story, while it is a major issue, not to the markets, they're getting used to it. So the answer is yes. I think deploying capital when you see these moments on these pullbacks is a good idea.
Heatha, you're a retail expert. One of the areas that's been hurt is Europe, right? And they keep saying that this Russia thing will have a serious impact, particularly these sanctions on Europe. And, of course, the retail space. Are you sensing that at all from your contacts?
No, it's actually very interesting. I think, to Jim's point, people aren't really reacting to it, especially in Europe right now. Where I think they are going to react, and you've said this before, is that long term, maybe in the winter, people are going to realize, well, these sanctions are really starting to impact us.
Well, they turn off the gas.
Yes, exactly. And so that's when we're probably going to see
I
it,
don't
not now.
completely agree, because Carlsberg, for example, does a lot of their sales in Eastern Europe. Their Eastern European sales are down over 20%. So it is affecting certain companies over there.
Well, they do a lot of business in Russia, though.
Yes, exactly.
I mean, if you sell alcohol in Russia, you are in trouble.
And look, they're slowly, I mean, okay, last time we talked, they only hit 4 McDonald's. Now we're at 12. Give them a couple weeks. I mean, look, I think you can't blow off these sanction things. I think Exxon, they just got hit. BP, Exxon, they're having a tough time out there. So I don't know who's applauding who out there. I think, again, it comes back to the oil market. The oil market will tell you when you have to start to worry about.
And right now, the oil market is telling us.
They're telling you go to the beach.
Yeah.
Chill.
They're saying this is not, you know.
It's not an issue.
That this guy is crazy. He might have wrestled a tiger with his bare hands, but there's a limit to how far he'll go. All right, guys. Now, last week we found out that the government, they were getting a majority of that historic $17 billion from Bank of America settlement. By the way, they've got a majority of all of those settlements. The settlements were for struggling former homeowners that were hurt by those shady mortgages that led up to the financial crisis. Well, now we know what the Obama administration is doing with some of that money, at least a large chunk of it. They're giving it to their favorite liberal groups. Let me just name some of them. The National Council of La Renza, Operation Hope, National Community Reinvestment Coalition, and Neighborhood Assistance Corporation of America. And some of these organizations, here's the irony of it all, they're the same ones that went to the government in the first place and says, you know what, this is racist, it's unfair, we want loans. They made the government make the banks make the loans. How crazy is that? And now they get the money that the homeowners didn't get. So, Heatha, how can they get away with this policy of misfortune?
I mean, it's an absolute disgrace, but I think that we are letting them get away with it. I think at some point, someone has to put their foot down and say, you know what, we need to cut out this bureaucracy. You can't just give the money to all of these different liberal organizations. The money needs to come back to us, the people that suffered from it.
Well, it should definitely go back to a former homeowner. I think I was crunching some numbers, Tracy, from GMAC, right? I think it came out to $839 per homeowner. I mean, come on, give me a break.
Yeah, well, but look, I mean, you could almost argue it's better that they go to liberal organizations than the coffers of the Treasury and let the politicians spend it, right? Because this has happened. I mean, how many fines have been assessed on these banks? And you tell me where that money's gone. It's disappeared into thin air.
Two-thirds of it seems to go to the government, the Department of Justice, and then they divvy up the rest. The states have taken a big chunk of it. And the people who were actually harmed, the people that were actually lost their homes, they get these measly checks. I don't know how they get to bribe the public like this.
You know, I worry about when the next time there's a need for the banks to step in and there's a need to, bail out a Bear Stearns or purchase a Wachovia or whatnot. I don't know if they're coming in, because you might actually come in at the wink nod of the government, only to find yourself on the receiving end of ridiculous investigations.
Who's the Bank of America took over? Who took over the
Countrywide.
Countrywide. Who took the Bank of America?
Yes.
So they take over Countrywide and they get hammered. And there was one more. They stepped in and said, almost at the behest of the government.
Well,
JP stepped in for Bear.
Jamie Dimon's not going to do anybody any favors ever again. And Bank of America still can't get out of its own way with that Countrywide and Angela Mozilla
But what about the idea, though, Matt, that the government takes this money and then they give it away to these special interest groups that had, I mean, it's crazy.
It's like Robin Hood, but a demented Robin Hood. At least Robin Hood was taking from the rich and giving to the poor that needed it. He's taking from the rich, but giving it to his buddies. Like they're not getting it far enough to give it to the people that actually need it. If I was a homeowner who suffered through this situation, you would never get a vote for me ever again for the Democratic Party.
This does have consequences because if the banks feel that they get involved with consumer businesses, consumer lending, only to have it come back to bite them,
right,
then they stop lending. So when you want to talk about why the economy is not kind of grinding forward or at least picking up a little more pace, the banks are reluctant.
I look at that quarterly report from the Fed on when they survey senior lending officers at all these banks, and they are lending to businesses and only reluctantly starting to lend to consumers. All right, guys, you don't want to miss my next investment idea. It's coming right up. The company is positioning itself to make big bucks from Samsung and Apple. I actually like this so much, I'm a little nervous. Okay, also, send your questions, and we love them. Send them to me. We want to see them. By the way, what the hell scared you in March? I tell you what won't scare you. I'm going to make you some money. Keep it right here. All right, guys, let's do this. I had a great week. Remember Intermune? That's how we started the week. I want to end it with a bang. My first stock, well, the only stock I got for you today, Synaptics. I've actually mentioned this before. Now, this is a company, it's #1 in touch and fingerprint ID. Last month, they made an acquisition that also makes them #1 in integrated circuits for LCD technology. Now, this deal is going to immediately increase the company's addressable market by 150%. Also, it's going to strengthen relationships that they already have, be immediately accretive to non-GAAP earnings. That's important. That means it's not going to be a drag on the company. It's going to bolster it right away. Here's the backdrop. Synaptics sells touchscreen chips to Samsung. They used to do business with Apple. The company they acquired is the sole display driver chip maker for the iPhones. Okay, it's starting to put it together, right? So not only does this bring Synaptics back into the Apple universe, but now this chip technology, both of them, they can merge them, have a serious product, and the companies together will, I think, be very, very huge. Now, in the most recent quarter, they posted record revenues. They were up 43% for the full year, 37% for the quarter, just all across the board. The real big deal was mobile. Mobile was 77% of business. That's where it's at. Management announced a $200 million share buyback. It's a former high flyer. The wings were clipped, but it's starting to come on really nice and strong. I will say this right off the bat. Because of the volatility, it has higher than average risk. In fact, 38% of the float is short. Wall Street is betting big time against this. I think the shorts are making a huge mistake. These shares aren't expensive in any kind of way that I can see. The PEG ratio is 0.8, forward PE of 14. I don't know why they piled in on this one. It's the second time I've mentioned it. It's gone up a little bit since the first time, but I still think there's a chance to get in there. North of 80, that's when I think we're going to get a short squeeze. My target before was 93. I'm starting to lean to the possibility of this being a $100 stock. So, Matt, Synaptics. I'm not sure where you were the first time on this, but what do you think?
I looked at my notes. I liked it. So I was on board with you on August 5th when we talked about it. When they had the earnings report, the revenue guidance was actually a little light because of Samsung. Samsung's been struggling a bit, but they're able to get through that. Today on the chart was a technical breakout. Actually, very good volume for one of the lightest volume days of the year. So to me, the short started getting squeezed today. This stock was going sideways for 3 weeks. Nothing was happening in the stock, and it broke out today. That was the biggest buy signal I've seen in the last few months for Synaptic.
You follow this one?
No, I'm a fan of your pick. I really am excited by it. I think you highlighted the acquisitions that give them a complete portfolio of touchscreens. And I think the fingerprint technology, the authentication technology, with what they did with Samsung, which they now did with Apple, I think this is going to really be a key driver of the company. You also mentioned the short interest. I think they're on the wrong side and going to get squeezed.
Wow. What do you think, Ethan?
I mean, isn't Apple having this big announcement on September 9th?
Yes, they are. Yes, they are.
That's all I have to say. September 9th, I think this is a really good, you're positioning yourself well for this
all I
huge
can tell you
announcement that's about to
that day
happen.
there are going to be a lot of stocks up 20% and a lot of stocks down 40%. You know what I'm talking about, Tracy?
Yeah, I do.
All right, time now for us to address your questions. Remember, anything, money-making moves, you're curious about an individual stock, the overall market, I'm here to help you. Helping us right now is Tracy. So, Tracy, what do the people want to know?
All right, so your friend Michael is out there. He wants to know about High Crush Partners. He says, can you talk about where it's headed today? And thank you for the tip when it was $62.
All right, Michael, I don't give tips. I give you investment ideas, okay? I don't want you guys treating this like the fast horse, even though, you know what? I am a victim of my own success to a little bit of degree, because people, we're gonna talk about that next week, because I do want this to be.
I know.
No, I do
You're
want
gonna
this
break
to be.
your shoulder patting yourself on the back
I
like
want this
that.
to be a long-term buy and hold show. but I do love them when they pop right away. I know, it's crazy. Michael, I don't know. We're in it too. It's set a new high today. I'm going to raise my target on it. I'm not sure what it's going to be. I'll crunch the numbers over the weekend, but thanks for holding. It's made a huge move, but I think
All right, Michael is going to continue the butt kissing right now. He says, I love your show, Charles. Should I jump on Smith & Wesson? They are pretty low right now. Thanks, Ask Payne.
No, Michael, I tell you what. I saw a few months ago where we made a lot of money for people in the gun stocks, and one of the things we used as a guide was the FBI data when people registered to own guns. Right up into the Obama election and after, you could see that number went off the chain. So did those gun stocks. It's been drifting, coming down a little bit. I've liked the bullet plays or Cabela's to a lesser degree because they're not solely on guns. But I would not do Smith & Wesson right now.
Or not at least until someone in Washington pulls up gun legislation again.
Yeah, I mean, if another Democrat is reelected, if Hillary's reelected, then you know what? And she starts talking about taking away Second Amendment rights, then I'll load up on him.
I stay far away from Smith & Wesson, Ruger, all those, but the high crush partners I own for my clients, I think it's the best way to play fracking because you're playing all the areas, all the shale out there, all the companies, they need sand, high demand, not a big players. I mean, that Silica SLCA breaking out to no high today as well.
Yeah, I mean, when I'm watching Mr. Gates, and Mr. Bloomberg go anti-gun and whatnot, the legislative, the legal risk, I'm not a fan of it right now. And I like your point about the FBI, the registration. Yeah. I'm not into Smith & Wesson right now.
But not because you're not anti-gun.
Not anti-gun. Just saying. I don't like where they stand right now.
Okay. Hey guys, thanks a lot. Remember, you can always tweet me with any questions and any time of the day or night. CB Payne, and don't forget for these questions at the hashtag AskPayne, or you can post it to Facebook, facebook.com/Charles Payne Fox. All right, well, before we head into this holiday weekend, we want to leave you with a little bit of motivation and an appreciation for true American success. That's next. You know, when I think of my own life, I really honestly marvel how I got here to the privilege of being able to speak to you guys right now from this TV studio. And then I think of my mom and my grandmother, and it all becomes even more of an improbable dream. You know, they call it the American dream, and you can never lose it. You can only give it away. Okay, you can be angry, be frustrated, be afraid, but pull your head out of the sand, guys, and always know that there's more than hope. You don't need hope. We've got the DNA of overcoming so many things. It's still the key fabric that holds this nation together. So my thing is stop being the pessimistic people that we are. Pick up that baton that was carried to you by your parents and grandparents because your kids are waiting for you to pass it to them down the line. Anyone disagree with that?
I agree. And you know what I think is a little tip? Surround yourself with other positive people because people that are miserable love to bring you down. So if you're stuck in that rut, you have to get out of that. Surround yourself by success and by positive people.
I can't believe the smart, brilliant, beautiful people I meet across this country who are so pessimistic and they keep asking me, can we turn it around? Are we done forever? No, we're not done forever. Now, if we stay like this for another 8 years, we are. But not right now.
Abundance, not scarcity. You have to stay positive, and I totally agree with you.
I think you have to change your perspective, too, on stuff. Sometimes if you look at something a little bit differently, you see things a little bit differently, too.
But you have to have that wisdom to be able to do that. Though.
I mean, sometimes it just takes, like, standing up on the kitchen table and looking down and getting a different view.
I think as long as we wake up in America, guys, we got a shot. Okay, before I go, speaking of that, today's salute to an American success goes to Joanne Tolgman. Founder and president of Granny Joe's Products, a company that brings just a little bit of bling bling to senior citizens in their golden years. Now, Joanne's company, it makes sequined oxygen tank covers, walker bags with fun patterns made of lace and silk, and napkin clips with pearls and beads. And those are just to name some of the few products. I can see Tracy filling out her form now. Joanne, we salute you, all right, for helping seniors age gracefully and in style. For more on our American success stories, guys, go to our website, foxbusiness.com/Charles Payne. Hey, it was a great show. Our thanks to Jim Frischling. We appreciate every time you're on the show. Hope you guys enjoy your Labor Day.